Hey there, traders and investors. Todd Gordon here of tradinganalysis.com and Inside Edge Capital. Hope you're well. Happy last day of January 2024. Markets are in a really interesting position. As I've been saying to our members and subscribers and investors, like I can't remember a time that I've been so bullish in the near term, but concerned in the mid to long term. And today's Fed announcement that Powell said, don't get your hopes up for a March rate cut, really hit the markets in a very interesting technical position. I'll show you where we're at. I'll show you our interpretation. I'll show you some sector rotation. I'll tell you about an important event that we have going on tomorrow. There's a lot to cover. So let's hit it. So, the position of the market, which we'll cover, I'll come back to it, but Powell comes out and says a March rate cut is not likely. I've been saying this publicly on YouTube and every day to our members, I don't think the Fed's going to cut 6 times this year. I just don't think it's happening unless some significant volatility or event comes in or something that, some train hits us from around the bend that we don't see. And I said that the function of a pullback in the market that I think we're starting to see is going to be a reaction to the market's realization that we might not get 6 rate cuts. Fed funds might stay at 4.5, 4.25. And how deep a correction comes, I think will be, how personal the markets take it, so to speak. But I am not surprised at all to see the market selling off. I have been, hardcore bullish in 2023 and even in 2022. And here's the technical position of the S&P. We're Elliott Wave guys, and if it's not for you, that's fine. I can break it down for you. For me, it's just I think I was born with it, literally. We see 5 up, and I've debated a lot in the Elliott Wave community who like to use it. I call for evil, which is constantly counter trend trading, always looking for the end of a 5-wave move, and there's a lot of doom and gloom associated with it. But there's actually one of the most bullish methodologies to interpret stock market action ever. And that's a discussion for another time. So, I want to talk about some key indicators that helped us identify that, this was a point where you want to be buying. And that's exactly what we did. I've been long all year, made a lot of money. I had shorts and cash raised in the wealth management business, and I reduced it here, and we put some money to work, almost all the money to work. I think we had like 4% cash at this point, after being hedged, and that was very much in the minority. There's still a lot of bearishness out there, and the market moved higher. Now, I'll talk about the possible downside implications and what we may do to guard against, according to the basic Elliott Wave theory, the 5-wave motive wave should be retraced roughly 1/3 to 1/2 to 2/3, and a common target is the area of the 4th wave, which is down here. And here's also where you pull fib in. So I have said to members and investors, I can't remember a time I've been so near-term bullish. And I said this right up until last night, so near-term bullish, but really concerned in the medium and even the longer term, saying going out the next 3 to 6 months. That's long-term for me. Okay, so today's Fed announcement that Paul said, hold on, maybe a March rate cut isn't likely, really hit the market. So, let's kind of talk about, we'll talk about the chart, but we'll also talk about, how we got to this unbelievable, move to new all-time highs in the S&P. We just did that. We're on a quest for 5,000 S&P. NASDAQ already made a new high. I'm thinking back to here in the end of 22 and the end of 23. There's a ton of bearishness out there. And one of the things that, this is one of several charts that I put out at the end of October 22. Here is the new year, 22. So that's 2 years ago, down. And then I was wondering if this is the first wave up from October into December, A, B, C. And I kind of made a joke for members and investors, like this whole poop show could be a running flat in wave 2. That means there should be support at 3,800, and then we push higher. And that's exactly what happened. And there was some times I was considering that we're going to have on the downside, but if you've been following me, we've been very bullish. Now, another thing that really helped me figure out that this running flat, which is again green 1, A, B, C, was really just a corrective flat against the newly established uptrend. Okay, so the uptrend began in October, and I said maybe this is viable, and I did start to take off some of our hedges and reduce some of the cash holdings as we begin to move out of the zone, which again is exactly this right here, and this is the wave count. There's your green ABC right there. Another factor that came in was rotation. And this is a chart that I put out to our members here in March and April of 2023, looking at the rotation. And if you look at what's happening here, we're benchmarking against the S&P 500. This is a monthly. These are your 11 sector spiders that make up the American stock market. What is rotating in? What is showing a move, back up towards the north and trying to get over to the northeast? Well, these three guys that I'm pointing to here, XLC, XLY, XLK. Communications, consumer discretionary, and technology, those are clearly your growth offensive names. Okay, value rotating out after leading sector rotation in 2022. Now, if you remember, during 2022, with massive move up in rates in response to the volatility, the value trade was ripping, and that's going to be industrials, healthcare, staples, utilities, financials, materials, probably forgetting of some. So, that was the big rotation. These tails that you're seeing are from 2022. But as I'm saying here, the value trade was rotating out here at the arrows are March of 23, so Q1 of last year. So what was rotating out? Healthcare, staples, utilities, materials. I have it right here. Healthcare, staples, utilities, energy, materials, and financials. Right? So what was rotating in? Again, tech, consumer discretionary, comms, industrials, it's kind of cyclical, and the rest of the value trade was rotating out in energy, which was a big mover in response to the inflation. That was a huge outperformer, was also rotating out. So this rotation into growth is what sort of gave me confirmation that the wave count that I just showed you, that this was a very unpopular wave count, may be correct, because why would the market rotate into growth as we're about to approach 3,800 and potentially break down another 20% in the market? So rotation was a key part. Okay, now here we are. Enough. I've patted myself on the back enough. We've ridden the whole market up here. It's been a really nice move. Now, according to the Elliott wave theory, every 5-wave move should be retraced between a third, a half, and 2/3. Now, are we facing this? Well, let's go over to rotation and let's take a look. Now, this is something I haven't really done before, so hopefully you can see it. The only way I can do this is on the big screen, so I hope this works for you. What I've done is I've taken the 5-wave Elliott move, okay, and it's very crudely done here on the S&P chart. So here's October, December in wave 1. Here's that ABC flat I showed you in wave 2 that we did call the bottom, and I did get long and took off shorts and reduced cash in the wealth management. Rode this up 3, 4, and here we are in 5. Same chart as I just showed you over here. Okay, there's just a lot more right here, a lot more detail. But look at the rotation that happened within each wave. Okay, so the tails that we're showing here on the weekly rotation, VTV is going to be your value ETF, and VUG is your growth. The wave 1 began right here, okay, as actually we were still getting a move into VTV, which is value, in October, November, and then all of a sudden December, January, and here, okay, in December right here, we started to just roll over. Okay, just a little bit. But primarily the market was rallying, bidding up value. Okay, and I can even animate this and show you how that was going. Watch this. This is cool. And again, I hope you can see this. I know this is a big monitor. But watch as I scroll the beginning of wave 1. And again, VTV is value, VUG is growth. You know what I can do? Watch this. Okay. So watch as wave 1, this is the absolute low here in October 22. What happens? the market rotates into value. Okay, not surprising because the market thinks this is just a short covering rally before we make new lows. Why would we buy growth stocks? Okay, fine. Then, then what I'm going to do is I'm going to show you the rotation from March of 23 after we went through that ABC flat correction that I just showed you in the prior slide. All right, so I'm going to turn the spinny things on now. Okay, so now what happened was here. Actually, let me go back and do this. Yep. Okay, so now once we started, in fact, look at this, VUG, the rotation started moving into growth even while wave 2 right here was still happening. So the market was rotating into growth out of value even before wave 2 ended and wave 3 began. As soon as wave 3 began, VUG, which is your growth ETF, went into the leading quadrant as value was moving out. That was a big sign that, okay, maybe they're coming after growth because we're not going into recession and inflation isn't going to destroy the economy. Okay, so then that is the duration of wave 3, right? So, okay, we got a little bit of a hook back as wave 3 ends. We go from July down to October of 27. And then I'm going to turn this off. And this rotation right here is going to pick up where wave 4 ends in the beginning of wave 5. So I'm going to do this. Okay. What happens when wave 4 begins? Okay. VUG, which is growth, is trying to rotate back up and in his values out. But watch what's going to happen. Growth is now stalling. And look what we just did. We just did a little bit of a hook down in growth and a little bit of a hook up in value. Okay, so is that a warning sign if the growth rotation just ended in and value rotation out ended and we're about to hook back up? Are we going to start the process over? And I want to just do one more little example here, and I think I'm going to maybe mess this up a little bit. Yeah, I just did. That's okay. So what I'm going to do here is I'm going to take value growth out and put the sector spiders in. All right, so I'm going to go over here and code, and then now I got to make sure I was supposed to unfreeze them, but we're looking from the beginning of October to the end of December. All right, so now those guys are December, and we are going to begin the tails in October, which is going to be right there. Okay. So just looking at a different way on this sector rotation, as we moved up in wave 1, what was happening? Well, we were getting a move into staples, XLP, in industrials. We already got the move into healthcare. We already got the move into energy. Utilities hooking up. Consumer discretionary doing nothing. Tech was kind of hooking up, looking interesting. Comms was doing nothing, and real estate was hooking up. I would say generally that was a value-led trade. Now, financials were already ripping. Okay, financials are way out to the right. So generally that was value-led with the exception of tech acting a little spicy there. I like that. Okay, so let's take that off and let's go over to wave 3. Now, this is where the big gains are made. All right, so I got to reset this. I'm going to get the Vanguard ETFs out and bring the sectors in. So we're looking from March up to July. Okay, so we're going to go like this to July. I just want to make sure the tails are in March, and there we go. Okay, there's a lot going on here. I know it. But for the entirety of wave 3, what happened? Well, again, let me just play it. What's happening? XLK, XLC are up and leading. So we know tech and comms are leading. Discretionary is kind of trailing. Rotating out are industrials, financials, energies. And then as we proceed through wave 3, looks like the value guys, staples, utilities, healthcare are trying to rotate in. Industrials not doing much, real estate not doing much, and financials doing nothing, energy doing nothing. XLC, XLK, which are your real growth trades, alpha trades, offensive trades, begin to hook down. But let's see, do they right the ship? Oh, look at that. XLK goes one way, XLC goes the other way, as XLY joins the party. But look at the message here. At the end of wave 3, Tech, comms, consumer discretionary, all on the right side. That's outperformance of the S&P benchmark. Look at all the other defensive, staples, health, real estate, utilities, energy, financials, all clearly on the left. This is in the latter stages of wave 3. Okay, then we end wave 3 right there, which is going to be in July. Okay, and we'd already seen XLY, C, and K, tech, comms, and communication rotate down as some of these defensive and more cyclical names are starting to rotate up. So let's just finish this off. I think this is so cool. I probably lost most of you at this point, but this stuff for me is just so cool. Where are we now? We know that the value trade began to hook higher. We know the growth trade began to hook lower. So let's line this up and just see what the sector rotation is telling us. Okay, so again, we want to go right to the end. The wave 5 right here began in October 27. So where's that tail? October 27. Okay, so let's just pull this guy apart here a little bit. What's happening? Well, the first thing is I see XLK, which is tech, rotate down. Comms is already rotated down. And that's even with Netflix's big move, Meta at new all-time highs. Google earnings wasn't very well received, but comms is already rotated out. Tech has begun to rotate out. Consumer discretionary, we just did a free video of that, Alex and I, yesterday, just got stuffed. Financials coming in. Staples doing a little hooky hook here. Healthcare doing a big old hooky hook there. Real estate's already in leading, but it's starting to head lower, and energy's starting to hook up. So the takeaway here, I think, is we are seeing rotation into the value out of tech, comms, and consumer discretionary, which makes me think that we may have some problems coming up here. And we're going to look to hedge. We're going to look to protect. We're going to look at the trade in the downside. Now, we're going to talk about this more tomorrow. There's an important webinar coming up. Did you know that the guy who basically invented the concept of relative rotation, Julius de Kempenaer, is he joined our team at Trading Analysis. We're doing a joint venture with him. He's helping us develop out our RRG approach, which we are looking at vast quantities of different kind of markets to find the best trading opportunities. So we are going to host him tomorrow in a webinar. He has joined our team. We're producing content. We're up and running. We're going to launch a very exciting product coming up. So the founder and inventor of relative rotation graphs is now working with Trading Analysis. We're super excited. So webinar at 2 and 7 p.m. tomorrow night. So be sure to join us. All right. Appreciate that. Thanks for hanging if you made it this far, and I'll talk to you guys soon.